It's a bird. It's a plane. It's Tesla stock. Tesla stock has been the beast of the stock market over the last year. The Tesla stock haters have been like the kids in high school where the bullies stuff them in the trash can, pull them out of the trash can, and then throw them in the locker. Tesla is the bully of the stock market right now. It hit lows of under $400 per share on the Rona sell-off. It has since rallied and is currently trading over $2,000 per share. It has been on straight turbo mode. Like in Madden, when you press the right joystick and you go turbo and dude runs 100 yards for a touchdown, that's what Tesla is doing right now. However, it is not all rainbows and sunshine in Tesla world. Over the last few months, Tesla has been trading in this beautiful, euphoric world where you wake up to 5, 6, even 10% gains. Every day it's green and making huge upside moves. Tesla shareholders are happier than a fat kid with a big, huge cake. But that cake is about to be stolen from the fat kid and thrown back in his face. In today's Touchdown Trades market analysis, we're talking about why you should be aware in Tesla stock and the big changes coming to the stock price. So stay tuned. What is good, all my trader homies? It's your boy Kevin from Touchdown Trades, coming at you 30 floors below ground level from the Touchdown Trades trading dungeon and studio. Today we're going to be breaking down this Tesla stock, and I'm going to give you guys a few reasons why you need to tread very light, be very cautious when thinking about buying this Tesla stock at these levels. If you're new to the channel, welcome to Touchdown Trades. We talk about the hottest stocks in the market every single day, swing trading penny stock videos, as well as large cap swing trading videos and trading tutorials. So if you're into that type of thing, consider subscribing down below. All right, guys. So this Tesla has obviously made an incredible move here lately. It hit lows of a little bit under $400 a share when the market sold off in March, and has since gone turbo mode and rallied all the way up to breaking highs at $2,000, a 500% move in just a few months. So is this sustainable? Is this a overreaction? That's what we're going to be breaking down in today's video from a fundamental and technical analysis standpoint. So let's get right into it. First thing that I want to talk about today is the catalyst which resulted in this move right here. So we have several catalysts that caused the move. The first being, all right, so the first catalyst that really jump-started this move in Tesla was just the EV sector being strong as a whole. We had Tesla, Nikola, NIO, Workhorse, and even very small micro-cap penny stock EV companies making huge moves such as AYRO. The sector as a whole was extremely strong, which helped jumpstart this move in Tesla. We have an article here on the Motley Fool talking about how the EV sector may be in a bubble. It relates it to some natural gas moves in the past, as well as some other bubbles that we've experienced in the market in recent history. So I'm not personally saying that it's a bubble. I just want to detail the catalysts that have resulted in this move before we talk about why Tesla stock may be looking to turn around, and we need to be very aware when we're buying at these levels. So catalyst number one is sector strength. I actually do like some of these EV manufacturers such as NIO, NIO, and Workhorse, but that's for a different video. Okay, so catalyst number one, sector strength. And then we had on July 2nd, we had news that Tesla beat their delivery expectations. The company said that it delivered over 90,000 vehicles in the second quarter, which was easily beating Wall Street's expectations. So Wall Street only expected Tesla to deliver about 70,000 vehicles. Tesla delivered over almost 91,000 vehicles, so it beat it by over 20%, beat Wall Street expectations by over 20%. And Wall Street even set that bar kind of high because of previous beats. So they set the bar kind of high and Tesla still smashed it, and that sent Tesla skying even higher, up 10%. All right, so not even a couple weeks after they announced that they smashed deliveries. They came out with their second quarter earnings and they smashed second quarter earnings as well. They posted their first business year of reporting a net profit 4 quarters in a row, which is huge news in itself. They reported over 500,000 deliveries on the year, and they gave guidance that was better than expected. So the earnings report was just outstandingly good. It smashed expectations. They slapped Wall Street in the face and said, yeah, all you haters, we are going to put you in the trash can and we are going to steal your lunch money. So they posted sales of $6.4 billion in the quarter, and they posted a net profit of 50 cents per share when analysts were only expecting sales of $5 billion, and they were actually expecting Tesla to lose 82 cents per share. So it is quite an earnings beat there, and that sent the stock even higher. So it wasn't over yet. It wasn't over yet. Tesla had already ran up several 100% on just good news after good news, after good earnings report, after good guidance, after beating deliveries expectations, after just an overall strong EV sector. But it wasn't over yet. The short sellers, they thought, oh my God, it's finally over. We're going to be able to rest. We lost everything, but now, maybe now, it'll come back down to earth. But then Tesla announces a 5-to-1 stock split, which may not seem like anything really important because it really doesn't change anything about the company. It doesn't change any of the underlying fundamentals of the company. But what it does is it allows your average retail trader to be more involved in investing in Tesla. And what that does is it creates a buying frenzy. After they do the 5-for-1 stock split, Tesla's trading at $2,000 right now. So you divide that by 5, so it'll be trading at $400 after the stock split. That makes it available for your average retail traders, your Robinhood traders, to be able to buy Tesla. So after the split, there's going to be a buying frenzy, and people know that, so they went ahead and bought it before the split, expecting the split to help the share price increase. So that has even more, another catalyst to push this thing higher. And after they announced the split, the first day it jumped up 8%, and then every day after that, it seems like it's up 5, 6, 7, 8%. All right, guys, so I've drawn out a little bit of a map here to show the catalyst for each portion of this crazy move in Tesla. All right, so this first portion, the purple portion, will be we call it sector strength right here. The second portion, the yellow one, is the deliveries beat, where we gapped up from $1,000 all the way up over $1,200. The third one, the green one, where we went from like $1,400 all the way to $1,800, was the earnings beat. And then we had the stock split, which sent us back from $1,400 to over $2,000 per share. So that's the catalysts that have caused the move in this Tesla. Now let's talk about why we need to be very careful when we're trading this Tesla or buying it to invest long term. Doesn't matter whether you're trading it or you're buying it for an investment. I think we need to be really careful with it because I think we're about to have a pretty hard reversal. All right, guys, so first reason why I think we need to be cautious when looking at this Tesla is just because the overall market, right? The overall market has been very strong as well, and we're currently trading at all-time highs. We've made a huge recovery since the lows of the Rona. Tesla is a pretty high beta stock, so it's going to follow the market. We still have unemployment rates over 10%. The last time we had unemployment rates over 10%, right now we're trading at $338 on the SPY, and we have an unemployment rate of 10%, which is, the unemployment rate isn't the only factor going into a good or a bad economy, but it's something that I like to look at. The last time we had an unemployment rate over 10% was back here in 2008, 2009, and we were trading at $60 on the SPY. So this market is, this rally here is being caused by a short squeeze where people are trying to call the top and the market is always going to be contradictory. It's always going to be counterintuitive to what the average person is thinking. So if the average person is saying, wait a second, the unemployment rate is extremely high, the economy is not that good right now, people aren't working, there's a pandemic, then this stock market should not be trading at these levels. The market's going to say, wait a second, everybody says this, we're going to have to get rid of them first before we make the actual move. This stock market is going to need to come down eventually, and when it does, it is inevitable that Tesla will follow suit because of what's called beta. All right, so what beta is the measure if a stock moves more than 1-for-1 with the stock market, it has a beta above 1. So for example, if the S&P index goes down 1 point and a stock has a beta of 2, that stock will go down 2 points. Tesla currently has a beta of 1.3. So if the overall market drops 1%, Tesla will drop 1.3%. That's just the way beta works. So if the market is too extended and pulls back, Tesla is going to pull back at a clip higher than the market. So that's just a fact. I'm not trying to hate on Tesla, but that is just a fact. The second reason I think we need to be very cautious of Tesla buying it at these levels and investing in it right now is because of the valuation and the overall fundamentals of the company. Right now, we have a market cap of $350 billion, and I just want to run through the market and show you some examples to compare that to. All right, so people say that Tesla is not a car company, it's a technology company. It's not a car company, which I kind of agree with. I'm not disagreeing necessarily. Let's compare it to the best technology company out there and compare it to Amazon. Amazon has a market cap of $1,639 billion. So let's compare the two. All right, so Tesla is a technology company. I kind of agree with that, but doesn't mean that the valuation is correct. So I want to compare Tesla to Amazon real quick. I know it's not apples for apples, but it will just give us some kind of perspective to base this off of. So Tesla has a market cap of $343 billion currently, with sales of $25 billion. Amazon, a market cap of $1,639 billion with sales of $321 billion. So let's do a little math and break this down. All right, guys. So up here we have Tesla, the market cap of $343 billion divided by the annual sales gives it a price to sales ratio of 14. So down here we have Amazon market cap of $1,639 billion divided by its sales of $321 billion annually gives it a sales to price ratio of only 5. So we have Tesla trading at a valuation almost 3 times higher than Amazon, and I don't think Amazon is trading at any cheap deal either. Amazon's not a good deal either. So you have Amazon already extended, pretty much the whole market extended, and Tesla trading at valuations that are 3 times higher. 3 times higher than one of the best tech companies out there. All right, guys, to conclude the video, I just want to reiterate that I'm not a Tesla hater. But I do think that we do have to come back to earth. Look at this weekly chart. This is parabolic. This is what you call parabolic. And I do want to invest in this Tesla on pullbacks. I will buy Tesla all day long on pullbacks. But we're just it's just been good news after good news after good news after good news. And short sellers getting squeezed by those catalysts, which has created this overreaction to the upside. And once we get a pullback, maybe down to $1,200, I'll be right there with all you Elon Musk brosifs and all you Elon Musk homies. I'll be right there with you guys buying this thing up at this level right there. But up here, if you haven't taken profit, if you haven't taken some of your profit up here, you're nuts. The economy is on thin ice. The whole stock market is on thin ice. And once we get a rollover, then Tesla is going to go with it. Or investors could just say, hey, we got what we wanted out of this Tesla. let's just take the big hedge funds take profits, and this thing could have a few months of sell-off. Take some profit off the table, please. Please take some profit off the table. Go buy your Lamborghini. Go buy your Lamborghini with your Tesla profits, and then when it pulls back, reload. It's just trading way too high right now, and we need to be really cautious. I appreciate the view. You know what time it is. It's time to do me one big favor. I only ask for one favor every video, and that's to give the like button, the old touchdown trades, snake eye jab in the eyes. You know what it is. All right, guys, I appreciate all of you guys. Love you all, and I'll catch you in the next video. Peace.
Drop.